Never mad at the fact he's corrupt like a senator. All right, let's get going, YouTube. YouTube. All right, good morning. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Here we are. So today we are going to use TRADARS and Trader's Way, the perfect combo for us. Let's get an update on recent headline news.
The U.S. dollar is higher versus three major pairs to start the new U.S. day and back between 100 and 200-hour MAs.
Oil prices fall on continued demand fears given trade uncertainty. U.S. dollar sees small bounce with markets pricing in worst of tariff shock behind JOLTS job openings set to show a minor decline in March.
Crypto fraud soars as high-risk addresses on Ethereum. Tron Networks received $278 billion.
Gold flirts with 1% loss on Tuesday, while markets see tariff fears have peaked.
Eurozone economic sentiment at 4-month low.
FTSE 100 modestly higher extends gains to 12th straight session.
Oil falls as trade war concerns dampen demand outlook. Belgian economy grows 0.4% in Q1.
Good job, Belgium! Right on. And according to our calendar, we have 9 minutes for trade balance in the United States of America. And something seems to be happening around the idea of tariffs. I can't quite tell, but oh my God. Yeah. So cool. So we will get that. That'll happen. And then later this morning, the big news of the big economic news of the day is going to be JOLTS at 10. And I covered it fundamentally at traders.com this morning. There are scalp spot swings and position trades available around how JOLTS has performed in the past. But you have to know, will it perform if the number is greater than expected or less than expected? It matters. Ha 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 ha! So if you know, now you know. So anyways, you should know these things. We've already done the analysis. We did it last week, and then we also did it this morning. Oh, for sure. State of the markets. Let's eyeball a bunch of charts, see where we are. Euro pound favoring down and stuck in our range. About pig dog. Ooh, there was some dollar strength or weakness, and then we've had some strength, and we are below the moving average. Okay. So, like, for example, if you're a bear, you know to sell in this little zone here. That's what this is telling you. That somewhere in here is your sell zone. Sell zone. Cool. Delete. EuroCAD, you're probably not on that. Gold. Okay, we can look at gold. Okay, so where's the, if you are a bear, you're doing one of these things. Okay, if you're a bull, okay, you're doing one of those things. Remember, I don't know the future, so you have to know whether you're a bull or a bear. Make a decision. We know Tuesday is a quiet day, followed by Wednesday being a good day. Okay. We also know this time of day, you get an increase in volume, volatility. But this is a live chart, so you can see the hourly chart. Huh? Okay. Going to get better. All right, cool. So now you have to decide, are you up or are you down? USD Mexican peso. I only sell this. So the question is it a sell today? Is it a sell tomorrow? Is it a sell next week? Is it a sell now? Yeah, that's what you need to decide. And so the way that you do that is based on implied volatility. Okay. That is your sell zone. Now you're like, well, Wayne, maybe that's actually impacted by this giant candle here. And maybe it's too high. Maybe the spike lifted this too high. No, 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 no. You're wrong. That's not what it's doing. It's not acting like a pivot point in that sense. It's looking at Tuesdays at this time of day. Many, many, many Tuesdays in this hour and in this 4-hour range, and then every hour updates. So then this range updates, and this range updates, and this range updates because they're all rolling. So it's not today, it's not Tuesdays, it's the 24-hour period on Tuesdays. Okay, we're not likely to go lower than that or higher than that. So it's not directional, but it's not even, it doesn't even see that. So if you are a bear, and I can only be a bear on this, it would be unusual for it to go higher than this. So therefore, I could think about that. Aha. So it's much smarter than just looking left. You don't need a machine to do that for you. Okay. Euro dollar. Same. Look at this. Okay. Neat. So let's say instead of being a bull, let's say you're a bear. Okay. Today, we're not likely to go higher than that. If you're correct on bearishness, then guess what? It's probably a good place to have your stop. Based on what's happened before, that would be very unlikely. Unprobable. So that's probably where you want your stop. So if you were a bear, you'd be doing this and targeting that, and then probably even lower in the future. Yeah, well, it could be a day, it could be a week. Like, it's only telling you the implied vol of the next rolling 24 hours. So over the course of the next 24 hours, starting from now until tomorrow, it would be very unusual for the market to go higher than that if you are a bear. So if your general thought process is this, okay, then you probably want to sell somewhere in here, and your stop would be above there. And if you are right on direction, it'd be very unusual. It just hasn't really done that in the past. So it's not a prediction at all. It's a calculation of, is that, if you're a bear, it probably won't go higher than that because it hasn't really gone higher than that in the past. Okay, cool. Now, what if you're a bull? Okay, well, let's look at it from that point of view. Okay, we would want to buy somewhere in here if we were a bull. So you don't buy it because of the price. You look at the time of day, you look at your charts, you look at pivot points, you look at smaller time frames than the hour, maybe a 15-minute, maybe a 5-minute, maybe a 1-minute, and you know the implied volatility should be rising because the markets are opening. So maybe you're on a 5-minute chart and you're like, okay, this is interesting. Then you're going to analyze this as maybe a potential roll reversal. Okay. And you know that's the 1 hour, 4 hour implied low, but maybe there's a daily pivot, maybe there's a weekly pivot. And you put all that in context, and that's your plan for the day. And now you're on a 5-minute chart setting up the market open. Okay. Once again, you don't know if you're right on direction, but you know what you're looking for. You're using your charts to confirm or deny. You're not looking at your MACD for a trade signal. Okay. Why'd you buy that? I don't know. My MACD told me to. It's a good way to burn through a lot of charts, right? How's Kiwi dollar doing today? Yeah, it's going nowhere fast. Okay, nowhere fast. Okay, Tuesdays are boring days for this pair, but this is the best time of day, which will fizzle out in the next 2 hours. So what's the likelihood of the next 2 candles, guys? Is it likely we're going to be down here? Is it likely we're going to be up here? Are we going to make a lower low or lower high? Sorry, lower low or higher high today based on how much time's left? What do you think, guys? Yes or no? What's your opinion? We have 2 good hours left. Each one of these is an hourly candle. Yeah, probably not, right? So what does this tell you? Well, if you are a bull, maybe you can get to this level, not today, but from today and into tomorrow, but not likely Friday. Sure, it could, Lucas, for sure. So we would say, for example, if Jolts is less than 7.2 million, then by tomorrow we should be at least at that price. We get back to 0.6. And then by Thursday afternoon, volume and volatility is going to drop significantly. So Sunday afternoon is the best time to be trading. Okay, and then you buy a dip Friday morning, or sorry, Tuesday. Buy Sunday, and then let's say you're a bull again. I'm saying if you're a bull, you expect it to fade on Tuesday and make a new high on Wednesday, and Thursday is a profit taking day. Okay, so let's say this was your trade plan for the week. That's how you want to use it. Is that going to happen? Well, I don't know. But that's how you plan. So you should expect not a lot today on this pair. But does that mean you don't trade today? No. Today you should be planning tomorrow. So what trade are you going to get in that will take you into tomorrow? That's how a boss plans. Okay? Remember, you have these tools now. You shouldn't be logging into New York going, hey, what am I going to do today? I don't know. Are there any trade signals on TRADARS? That's not how you do that. You should already know what you were doing, and now we're really thinking about tomorrow. So today's a fizzle day, but that gives us an opportunity. Okay? So this, if you were a bull, you'd say, well, this 4 hours is going to hold. And this is the shape of your week. So you take this week and you really take the shape of it. That's if nothing happened. So something like this is bullish. The opposite of that would be a bearish week. Okay? Okay? Because remember, this is non-directional. This doesn't mean it goes up Monday and down Tuesday. Volume and volatility. So increase. So if it was a down week, it would look like this. Okay? Just inverse it. Cool. Right on. But plan for the future. Look at that silver. Silver's looking nice. Gold is tarnished a little bit. Are you a bull on silver? Well, it's not a great day for silver. Yesterday was the better day. Oh, so, now we have a bottom form. Okay, maybe it's an inverse head and shoulders. I don't know. But if you were a bull, okay, by the time you get to London close, maybe you can get to 33.5. But by tomorrow, we should be almost 34, huh? Because imagine if we do this up, this is likely to widen. And anyways, we'd get to probably 34. Oh, so what was the trade plan? Sunday, Monday? Okay, buy at 33. And by Wednesday, Thursday, we should be at 34. Oh, looflet till you boom. Yeah. Looflet till you boom. United States wholesale inventories below forecasts 0.7% in March. actual 0.5%. U.S. advanced wholesale inventories for March 0.5% versus 0.5% last month. United States goods trade balance declined to 162B in March from previous 147B. Greenland satellite services restored after Spanish blackout.
Eurozone loans to private sector rise faster. The US dollar is higher versus three major pairs to start the new US day and back between 100 and.
All right, cool. So all of these headlines just came out in the last few minutes. And so a very bad trade balance, which is great. Why is it great? Well, Americans feel comfortable buying foreign products. Weakens the dollar. Yeah. So we bought more stuff from foreigners than we thought we would. But when you buy stuff, it's usually a good sign. It's when you don't buy stuff, right? It's like in search and rescue. Should you be concerned about the person screaming, help me, help me, ah! Or the injured person that's quiet? Yeah, the quiet one is the thing, right? So, anyways, in this case, people are spending. That's good. It's if they weren't spending that it would be a very big concern. You're like, uh-oh. Let's just see where we are. Not going to go through all of this, but I'll spend some time on jolts for us. Yeah, not a lot has happened in the last couple of hours. Down to 61 on oil. You might want to put that on your radar today. Although we are neutral on oil. Look at our score. 0. Yeah. We looked at the risk gauges, like this is just for today, but we looked at the risk gauges earlier this morning on 3 time frames, and whoa! We hadn't seen those results in a long time. Grumpy Cat says, hey, nice little trade on gold yesterday. Oh, well, thank you. Just another trade. Yeah. And I wouldn't even actually, I'd almost, it's so funny, right, Grumpy Cat? Hey, I almost disagree with you. The reason for it, let me very quickly counter. So I'm long, you're telling me it's good. Okay, great. Now let me tell you why we're both wrong. Okay, so you look at gold, and we're neutral. Okay? Oh, fundamentally, we are neutral. Interesting. Okay, and then we can go to the sentiment. And and check this out. According to 96 articles on 7 different websites, okay, gold is not favorable right now. And remember, this is how people feel. Okay? This is what they think. And the other one is based on quantitative analysis of macroeconomic data. And both are really like, hey, gold used to be the trade, but now it's not the trade. And yet here we are. I'm long. The market's not long. The fundamentals are not long. And I'm long, and you're telling me it's a good trade. So you're like, okay. And then we go to commodities, and we look at the 15-minute, 30-minute, hourly, 4-hour, and daily charts. And we're looking at trending patterns. And the only thing we see is bearish, not bullish, Grumpy Cat. No, it's a terrible trade. So how dare you, Grumpy Cat, insult me with your compliment on my long trade? Well, so that's the interesting thing. Every once in a while, you're like, a trader trades always, right? So you're like, well, Wayne, if it's that dumb of a trade, why did you take it? Because I go long on triple bottoms. Like, I can't help myself. Right? Like, I don't know. I'm sorry. I'm a technical analyst as well as a fundamental analyst. Oh my God. Like, it's a triple bottom. Of course I'm going to go long. But without the fundamental backing, I move my stop quicker. It's not that I don't take the trade. I move the stop quicker and I'm less confident in it. Oh, hey now. Yeah. So anyways, thank you. Thank you for that. Yeah. Yeah, oil's an interesting one, isn't it? I mean, I can turn oil on if you want. Hey, Wayne, what do you think about oil? Well, on the 30-minute chart, it's falling. And on a 4-hour chart, it is a sideways trend that is breaking down. So down for most of the day, up overnight, and down all day tomorrow. We're on our way back to $50. $50? But Wayne, we're at 61. Yeah, well, that's what the chart says. What do you want? What do you want me to say? What does it have to do with me? That's what the chart says. Well, hell's bells. That's cool, right? The power at your fingertips is amazing. Amazing. Now, what about the fundamentals you say about oil? Well, why don't we look at that? Wayne, what do you think about oil? What do I think about it? How do you feel about it? How do I feel about it? Slippery. Okay, cool. So, let me do the calculation. 0. Yesterday we were at 4, y'all. Now we're 0. Oh. Uh-huh. We usually peak out in June. We're not even in May yet. So what are you going to do? Well, first of all, we know that that's unusual. Okay? And right? And that oil usually goes up. So something unusual is happening. Does anybody know what the unusualness is? Well, I'll answer it because there's probably a YouTube delay. It's a slowing down of global GDP projections based on how people think and feel about tariff uncertainty. And if tariff uncertainty does lead to a contraction in global GDP, then the next assumption is that we will have less demand than for oil than usual. Okay. But there's very few people in the world that actually make the decision. Who makes the decision whether oil prices are going to go up now, like right now, today, or not? Who's in control of this market? This one I'll wait. It's a very small market. Thank you, Grumpy Cat. The refineries. If the refineries come to the conclusion that tariffs will indeed reduce global demand for energy, they will buy less WTI and Brent to make the products that refineries make, like diesel fuel and gasoline and jet fuel and plastics and all kinds of things. Okay, nobody needs crude oil except refineries. And they're making business decisions like anybody else. So this is the information that we have to pay attention to. And it's absolutely, totally normal for them to be buying this time of year, according to our research. And you're like, what? What do you mean research, Wayne? Can you expand on that idea? Okay. Okay. Now, we have here that over the last 5 years and over the last 20 years, oil doesn't do very well in April. But somewhere in April, presumably in the second half of April, a bottom is formed, and then we have a good May and a good June. But somewhere in this June period, presumably earlier in June, a top is formed. See, late in April, early in June. And there's a reduction in demand by oil refineries for new feeder stock, what we call WTI, and therefore demand falls and price falls. Okay. I've never been able to figure out what this is. It's just a glitch in the matrix, I guess. I kind of just ignore it. But notice right before that, week 17 is a low point. So, like, something's going on in the data here. But maybe, somewhere around week 17, week 18, something gets interesting. Wait, what? You see, it's week 18. Somewhere at near the end of April, beginning of May, something typically happens that changes the shape of the market. This is the accumulation. There's a massive increase in demand. Somewhere around this week. Oh, no. And it goes up for 10 weeks. And then we top out. All right? Week 27 is a fizzle. Is a fizzle, fizzle, fizzle. Fur, fizzle, shizzle. So now these are windows. We don't say buy week 17, don't buy week 18. No, no. These are windows of opportunity that somewhere around the end of April, beginning of May. That is what usually happens. Now, let me tell you, now that I just shared this with you, does it change the way that you look at oil? Does it change the way you look at the chart? Somewhere near the end of April. So where are we now? End of April. So what should we do? Should we look for support somewhere in here? So there's only two things bulls buy. Okay? What do they buy? Higher lows? Or what's the other one? There's only two things that a bull would buy. A higher low. What's the other thing? Double bottom. I just gave you a trade that could last 10 weeks. Not based on my opinion, on average. It would be perfectly normal. Now, do we have a perfectly normal year? No, we do not. So is it easy money? No. If you want easy money, rob a bank or try sell some drugs. Try maybe some prostitution. But if you want to work hard for your money, honey, okay, you got to make decisions and adjust with these unusual market conditions, but at least we know what normality is. Okay? But it must be easier to sell drugs to a drug addict than doing this. But at least, like, how hard is it? What's the sales pitch to a drug addict? Hey, you want some drugs? Yeah. Okay, good. So at least now we know normal. We know what normal is, and so we're ready, willing, and able to take normal and have strong opinion on what normally happens because you have factual data, but you have weak convictions. So what does that mean? For example, you could say, and I'm not telling you what you should say or think, but you could think, I am going to buy a dip. And if I have the opportunity, I will let this run all the way to June. Okay? So let's say you take a trade, Do you take that one? Do you take that one? Do you take that one? Doesn't matter. You don't have to be aggressive because you know it's going to go up on average for 10 weeks. But what do you care? You have to be at the very bottom. Could you be in this trade? Could you be in this trade? Could you be in this trade? Yeah, what's the rush, son? Could you be in all of those and compound? Yeah, of course. This is now you're making decisions. Okay. So strong opinion, there is no doubt. But weak conviction means, let's say you take this trade and then we have this. Do you hang on for dear life? No. You take the small loss and you walk. And you're like, okay, that didn't work. Is it going to make a double bottom? Or is it going to recover and then make a higher low? This way. Okay? But you know what you intend to do. But you're not stubborn. Okay? You are confident because you have the research and data. You know over the last 5 years and over the last 20 years, April's got a dip, and May and June are paydays. You harvest your oil trade somewhere in June. You set it all up. You plant the seeds somewhere at the end of April. We know it. It's factual. What's the problem? We have 20 years of data. But will this be impacted by conflicts happening now? Of course. That's the challenge. But 95% of traders don't even know what's normal, yet alone what's abnormal, right, Theta? So they don't have a chance. No chance at all. The other 5% are going to run them over like a freight train hitting a chipmunk. They won't even notice. Okay? Placing pending orders, but that's how you trade. Now, okay? For example, let's say I'm a bear. Grumpy cat. Okay? Let's say I'm a bear. What do? Oh. That's just above 62. I'll put it right below 62. Done. Okay? That's what you would do. That's easy. You can do that all day long. Cool. So there's always going to be pending order. The thing is, what do you want to do? Okay? Now, I said oil was going to drop to below 50, I said. Below 50. Not today. I've been saying it for a long time. Now, we just happen to look at some analysis, and 50 is in the card somewhere. Okay? So right now, are current conflicts impacting this? Yeah. People are worried about a slowdown in global GDP because of tariffs. And if there is an economic slowdown in productivity, hey, if you're not going to be productive, you don't need energy. So therefore, people are taking price down. What I'm trying to tell you is that might be logical. True. People have real fears. Yes, there are real tariffs. Well, they haven't happened yet. And if those things came together, which they haven't, then global GDP would be bearish, yes, and oil prices would come down. Well, all of that is conjecture and guesswork. Most of the tariffs haven't even they haven't happened yet. So what do we know is real? Okay. Will people get in their car this summer and drive to grandma's house with the kids in the back seat? Will Americans go on summer holiday with their big ass SUVs, get in the Cadillac Escalade, and drive cross country? Well, that's Americans' God-given right. So are they going to do it? Well, even more important than that, you have to think about, well, it's not what actually happens, it's the opinion of the refiners. Are they going to buy raw WTI from the suppliers or not? That's the real question. And the funny thing is, what is there, like 10 people on earth making these decisions? It's kind of interesting, right? You kind of want to get to know these guys. So there could be a disconnect. People are afraid of future slowdowns in GDP, but we only care about what the refineries do. So here's my take. This is one way of playing this game. I say refineries refine always. Because if they don't refine, then what is a refinery doing? Okay, like global GDP is slowing down. United States GDP is going to slow down. Is Budweiser still going to manufacture Budweiser? Well, what if there's a slowdown in the economy and they drink less beer because they have less money? Well, but what are you going to do? Shut down the beer factory? Okay. No, well, theta, right? What prevents Americans from enjoying summer vacations? Well, in this case, it would be a fear that they've lost their job and they don't have money, and spending $600 a person to fly their family across the United States. I was looking at coach tickets on Delta Airlines from Atlanta to San Francisco. Okay, they used to be like, I don't know, 250, $300 if you had to. They're over $800 right now. I think pretty close to $900 per person. Family of four to fly from Atlanta in coach to San Francisco's $4,000. Well, I think it's because California probably has crazy high fees to land the plane in California. But anyways, I'm like, $800, like, oh my God. So now what? Now you decide, well, maybe you'll drive. But if you still drive, now it takes a lot longer, and gasoline still isn't cheap, especially if you drive a giant, Ford F-150 four-door, or a big Cadillac Escalade, you know. Um, like my Porsche gets 12 miles to the gallon. Hey, it can hold four people. Yeah. So what'll happen is if you suddenly you can't afford to go very far. So then, yeah. So instead of driving to grandma's house, well, you can't fly. You don't want to drive. So now you're going to drive within 6 hours of home, and you change, right? And you localize. But it would mean you need less jet fuel, and it does mean maybe you need more um, gasoline. But if you're buying less stuff from Amazon, then you need less diesel, right? And so, okay, so now we reverse engineer and we go all the way back to the refineries. They're making these decisions, and according to our detailed research going back 20 years, we're standing on the landmine right now. Week 18 is a very critical week. It's the most important week of the year. Everybody else just thinks it's a random day. You think it's just like any other day? You're the random day. Isn't it nice to wake up going, this is the biggest week of the year? Now, with that being said, we made a big stink about this. Why? Because our research shows that somewhere in April, a bottom is formed. I need you to confirm this. I need you to talk to your subconscious brain. If you assumed somewhere in April a bottom would form in oil, would the annual projected low be an area of interest, a price of interest? We projected on January 1st that $58 would be the conservative low for oil. Therefore, if you hit the projected low and somewhere in this window, now I'll draw the window, somewhere in this period, actually, let's go from 15th, right? So in January, you'd say, well, somewhere around this window, I want to look for an opportunity to buy. And less than 10 days before that, you actually hit your projected low. Could that be the opportunity to buy? I want you to answer this. Could that be possible? Now, while you're thinking about that, I want you to actually answer because you're training your subconscious. Okay? But I will also emphasize that we have no idea what is actually going to happen. But you can't trade like that. You can't invest like that if you're like, everything is random. No, there's normal and abnormal. Otherwise, there's no way you would be able to control your behavior. If everything was random, then no strategy would work at all, no matter what you do. Okay? No, but so making profit says, okay, it's aggressive. Maybe. But the thing is, you're ready, willing, and able to try, and then you jam your stop. Okay? But also, it's a mindset too. Again, most people have no idea that this is the most important week of the year, this window we're in now. They're not placing any magnitude. Okay? Okay. So there's no magnitude to the thought. They don't know big, small. They don't. You imagine if you couldn't tell the difference between tiny and giant? Okay? So now you're placing an emphasis. And what I mean by that is you're ready, willing, and able to go long if bullishness presents itself. You don't buy because of seasonality. No. You're ready to buy because of seasonality. And you also, from that, should develop the confidence to say, well, if I get the opportunity, it's not worth $1 in oil. It's worth 10 weeks. Well, how many dollars up is that? Well, we don't know. Every year is different. But we do know it normally goes up for 10 weeks at a time. Maybe this year it's 6 weeks. Maybe this year it's 12 weeks. Once again, we don't know, but we know what's normal, and what we're trying to do is be normal in our trading. We're not trying to beat the market. That would be unusual. If you're trying to beat the market, most people probably are contrarians, right? doing not what everyone else is doing the opposite, which means you'll either go bankrupt or you'll hit a home run. Well, I don't believe in that type of trading. I manage endowments. I don't try to beat the market. I try to perform better in the beta. So here I'm saying the beta is the normality, and you have to know what's normal so that you could ride that normal wave. I imagine if you're a surfer, there are times of the year that are great for surfing and times of the year that are not great for surfing. Now, I'm not a surfer. I grew up in the prairies of Canada, but let's break it down. Things that probably impact surfing, or in this case, the waves. Probably the lunar cycle and probably the wind. We know wind is seasonal. If you live in like San Francisco, the coldest time of the year is July and August because of the fog. But in October, there's no fog. Now, is that true every year? No, but is it usually true? Yes. I mean, nothing funnier than looking at tourists in San Francisco in July, freezing because they're wearing shorts and T-shirts. They're like, we're going to California. And they show up and it's freezing cold. And they're dying. Uh-huh. Apparently they don't have weather apps on their phones, right? Cool. So that you should know that. Also, thinking about Southern California, there's a time when there's Santa Ana winds blowing offshore, meaning it comes from the inland and blows out to sea. Guess what? If the tide is coming up because of the lunar cycle and the wind is blowing against those waves, it holds the waves up. Well, wouldn't that be a good time to surf? Probably. So now what? To be a surfer, you need to know the weather? Well, no, you need to know the cycles. Not day by day per se, but what's the best time of year to surf? You can't just not know. Otherwise, you're going to be wasting a lot of time surfing when the tide is going away. Surfing when the wind is blowing back onto shore. Well, the wind is holding the waves down, dude. Okay. Hey, I think trading is a lot like that. Okay. Cool. So let's hammer this nail into the coffin. If an opportunity presents itself, I'm going to go long for 10 weeks. There's only two that can present. High or low, or double bottom. Now, really, there could be a third, but it's not in play now. What if it makes a lower low and hits our aggressive bearish annual target? And we start May at 50. Yeah, well, that's also possible. Okay, then I'm going to go this way. Why is today so important? Well, it's this week. It's not today. It's this week, which also means, let's say 2 weeks before this week and 2 weeks after this week, is when refineries start to buy WTI because it takes them a couple of months to turn raw crude into beautiful, clean gasoline. And they start building that and putting it into supply, first in storage, but then into distribution and retail. So that when you hit May 25th, which is the first holiday weekend in the United States, and into June and July 4th, okay, that there's enough gasoline for Americans to get in their vehicles and drive. So you have to understand what is human behavior. May 25th is a holiday in the United States in which many Americans get in their vehicle and drive. Well, it sounds easy enough, but you have to suck the oil out of the ground, distribute that oil, and refine it and blend it. You have to crack it. Okay? You have to blend it, then you have to crack it so that you can turn oil into gasoline. Well, that's not an easy thing, folks. Well, first of all, getting it out of the ground is not easy. And then getting it to the refinery is not easy, and it takes time. And then you get it to the refinery, and you got to put it through all these processes, which is advanced chemistry. And you change the molecules, right, to produce a product like gasoline. Then you have to get it from the refinery to storage. And then you got to get it from storage into distribution, which means you might have to take the gasoline from, Oklahoma to, Atlanta, Georgia. And then you got to put it into retail, which means then you got to take it from that facility and actually take it to the gas station in the middle of the night and put it down into the tank so that when you show up with your kids, right, in your Ford whatever, your Ford Taurus, do they even make Tauruses anymore? You fill the tank and there's gas. But what people forget is that's an amazing accomplishment that humanity has done to find the oil, drill the oil, extract the oil, treat the oil, okay, move it to refineries, change the chemistry and blend of the oil to create products, then to store the products, then to distribute the products, and then you put it in your car and you're like, okay, and off you go. The wife and kids are singing songs, woo, 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 and you're driving like Clark. Not Superman, but American Vacation, right? So anyways, holiday road, whoa, 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 road, 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 holiday road, whoa, 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 whoa. So that's why, Richard, it's just that easy. So if you're going to have gasoline at the gas station on May 25th, somebody needs to have ordered the WTI and have it delivered to the refinery. And that's what we're trading today. I mean, come on, guys. This is way better, okay? Way better than amateur retail trading. Now you're talking about the normal business cycle of the energy complex. If you don't know this, you don't know how to trade oil. I have a 17-hour course on trading oil. Would this also be time to restock for winter? No, that's already taken place. Okay, that happens in a different time. So let's try to figure that out. And then I got to go, man. I got to go. Market's opening. But let me tell you how easy that is. What about restocking for winter? So like Boston, for example, you would use a lot of heating oil. Okay, cool. Do you see it? Okay. So we're talking about this now. Do you see this move? So oil bottoms out in August and increases September, October. Why? Because they want heating oil in November and December. So why do oil prices tend to fall in November and December? Because they already bought WTI back in August, September, and they already manufactured the heating oil needed for November, December. Oh my God. Right? Oh my God. Isn't that crazy? Why does this tend to happen? Because June and July and August, we already have the gasoline. Do you think oil refineries are still making gasoline in the middle of July? No! So look, it's just that easy, guys. You have to be Illuminati. You can trade oil based on your MACD cross, or you can understand the entire energy complex and 150 years of history. And you understand how to find oil based on geology, how to then confirm it's there, and then how to drill a $3 million hole in the ground without screwing it up. And then how to extract the oil, whether it's conventional or unconventional, whether it's straight down or horizontal or fracking. Okay? You know the equipment for the drilling. You know what a logger is. You know what a quagmire is. Yeah, and then you pop the little Christmas tree on there, and then you move it to a pressure valve to increase or decrease the pressure, and then you have to put it into, right, a heater treater, vertical separator. You know what a meter line is? You know, all of a sudden, dude, shouldn't you be an expert in the oil industry if you're trading oil? You need to be an expert in everything, or you're an amateur in everything. Well, you're an expert in everything because you have traders.com. Now it's easy to get the data. And then with the data, you can make intelligent, logical decisions about every trade you ever make. And if you're wrong, you'll know it quick and you'll take the loss before it's a big deal. And if you are right, you'll let the sucker run. You're like, this is good for 10 weeks. Hey, amateur traders can't even hold on to a trade for 10 hours, yet alone 10 days. 10 weeks? Well, they just don't know. Like, you couldn't possibly make a decision like that if you don't know anything. So you're like, oh, the next 10 minutes is random. The next 10 hours is random. Well, it doesn't have to be. Okay? Illuminate, veritas. You know the truth through knowledge. Peace on earth. May the pips be with you. May our profits be above average. I'll see you at 4 o'clock. If you're a member of TRADARS, I'll see you at 4 o'clock to plan tomorrow.